Welcome back, everyone. We're doing a deep dive today. Going to take a close look at JK Tyre Industries Ltd's second quarter for fiscal year 2025.
Sounds exciting.
It is. It's like we're getting like a sneak peek behind the scenes without having to dig through all those, those long reports ourselves.
Exactly. I'm always up for a good shortcut.
We've got a few sources lined up for this one.
Yeah.
Their press release, the investor presentation they put out, and we even got to look at a peek at their financial statements.
Oh, wow. The full package. So we're going beyond just the headlines then.
Definitely. We're going to get into the details, the stuff that really matters. And trust me, some of this is seriously fascinating.
Okay, now you've got me curious. What kind of fascinating are we talking?
Well, for starters, you might be surprised to learn that JK Tires is ranked 19th globally in the tire industry.
Wow, 19th. That's impressive. I honestly hadn't realized they were such a big player on the world stage.
Right? Not just a big deal in India. They're swimming with the sharks globally. And they've been innovating from the very beginning. Like way back in 1977, they had the first radial tire in India.
1977, wow. I guess that explains why they're so well regarded in the industry. Always pushing the boundaries, huh?
Exactly. First, tubeless radials, high-performance tires, the list goes on and on. And do you get this? They're aiming to cut their carbon intensity in half by 2030.
Really? Sustainability goals. That's good to hear. It's not just a buzzword for them then.
Nope. Seems like they're putting their money where their mouth is on that one. Okay, let's jump into their Q2 performance, shall we? Revenue's down 7% year on year. And their profits, well, those took an even bigger hit.
Yeah, I was glancing at those numbers earlier. Not the most cheerful picture, but there's always a story behind those numbers, right?
Exactly. What's the story behind these numbers?
Well, what's interesting here, what's fascinating, I'd say, is that you got to look at the context. There's been this slowdown in the Indy market, especially when it comes to passenger cars and those commercial vehicles, the big trucks and stuff.
Yeah, that makes sense. A slowdown like that would definitely affect a tire company.
Definitely. It's putting pressure on JK Tires, that top-line revenue. But hey, it wasn't all doom and gloom. Their exports actually helped offset some of that domestic decline.
Oh, really?
Yeah.
So their global strategy is working out for them then?
Seems like it. And their Mexican subsidiary, JK Tornel, they're doing quite well too.
That's good to hear. There were definitely some positives mixed in there.
Oh, and one more thing, they're absolutely dominating the EV bus tire market in India. That's huge.
EV bus tires. Okay, now that's interesting. So they're already ahead of the game when it comes to the shift towards electric vehicles.
Big time. They're positioning themselves really well for that whole EV revolution.
Here's something else that caught my eye in the investor presentation, and I think you'll find this intriguing too. They're merging with their subsidiary, Cavendish Industries Ltd, CIL for short. Why is this such a big deal? What's the strategy behind it?
The merger. If we connect this to the bigger picture, it's all about streamlining. Think of it as JK Tyre giving itself a tune-up.
Like taking their company to the mechanic and saying, get me ready to win this race.
Yeah, exactly that. Simplify the structure, create some synergy, and boom, they're set up for faster growth.
So they're getting rid of any unnecessary baggage, anything slowing them down.
Exactly. And they're pretty transparent about the benefits they expect to see. They specifically mentioned cost savings, a wider range of products all under one roof, and fewer of those bureaucratic hurdles.
Okay, so cost cutting, more products, and less red tape. Sounds like a recipe for success to me. But how does this all affect you, the listener? Even if you're not invested in JK Tyre, their performance is a window into what's happening in the automotive industry as a whole, especially with this whole rise of electric vehicles.
That's a great point. Even if you're not directly invested, understanding these trends can give you an edge, help you make better decisions.
Exactly. So what should someone who wants to stay ahead of the curve in this sector be paying attention to?
Well, this raises a really important question. EV-specific tires. They're not your run-of-the-mill tires,
Oh, how are they different?
Think about it. Electric vehicles are much heavier than your typical gas-powered car because of those big old battery packs. So the tires have to be able to handle all that extra weight. We're talking serious load-bearing capacity.
Makes sense. Anything else?
EVs also have that instant torque, meaning they accelerate like a rocket, which puts a lot of stress on those tires.
So durability and grip become even more crucial then.
Yeah. Absolutely. And, JK Tyre, they're already ahead of the game in India when it comes to this. They've got this world-class R&D center, the Raghupati Singhania Center of Excellence. It's impressive. They're really pushing the boundaries of tire technology there.
It's like they're creating the footwear for the future of transportation. I love that analogy.
Right. It fits. And they're doing all this with a commitment to sustainability, which is really commendable.
Right. They've got those specific targets, remember?
Yeah.
Cutting their carbon footprint in half. And they're being recognized for their efforts, too. Oh, best-in-class ESG rating, environmental, social, and governance for 2 years running. They're not just talking the talk, they're walking the walk.
That's for sure. Now, to really understand the financial side of things, we got to look at their consolidated financial statement, which includes all those subsidiaries, gives us the whole picture.
All right, so this is where we get down to the nitty-gritty.
Exactly. We're going to unpack these numbers and see what's really going on behind the scenes.
Sounds good. Lead the way.
All right, so first things first, let's talk about operating profit. You might be wondering, what does that even mean? It's basically the profit they made from their main business, before we take out things like taxes and interest. This quarter, their operating profit took a bit of a hit, down a whopping 31% compared to last quarter.
Oof, 31%, that's a pretty big drop.
Yeah, it is. And if you look closely at the statement, you'll notice the cost of raw materials, the stuff they use to make those tires. That cost really jumped up.
So that's got to be cutting into their profits then.
Makes sense, right? Higher input costs can definitely eat into profit margins.
Absolutely. So let's break down those numbers even further, starting with the consolidated results, which give us the combined picture of JK Tyre and all their subsidiaries.
All right, looking at the consolidated statement, their total revenue for the second quarter was about 3,643 crore rupees.
Okay, and how does that compare to the same period last year?
Well, it's actually a decrease of about 7% compared to the same time last year.
So that's a bit of a dip. What about their standalone numbers, the ones that focus solely on their operations in India?
Good question. Looking at their standalone numbers, they pulled in about 2,533 crore rupees in revenue this quarter.
And how does that compare year on year?
That's down about 6% from the same period last year.
Interesting. So both their consolidated and standalone revenue are down year on year. What about their profit? Did we see a similar trend there?
Let's see. Their standalone operating profit for the quarter, remember, that's the profit before we factor in things like taxes and interest, went down 31% compared to the previous quarter.
Wow, that's a pretty steep drop. What caused that?
Well, if we dig into the expenses, we see the cost of those raw materials for manufacturing has really shot up. And this actually lines up with something that Dr. Singhania, their chairman, mentioned about natural rubber prices being a real pain point.
Right, so those higher costs for the rubber they use are really squeezing their profits.
Exactly, and it's not just their standalone performance that's affected. Their consolidated operating profit for Q2 also took a hit, decreasing by a substantial 26% year on year.
So clearly, those rising raw material costs are having a big impact on both their standalone and their consolidated performance.
Absolutely. They're definitely facing some headwinds there, but they're not just sitting back and letting those rising costs eat away at their profit.
Oh, really? What are they doing to counter that?
Well, Dr. Singhania mentioned that they're being proactive, implementing price adjustments and focusing more on those higher margin premium products. And they're being strategic about how they manage their inventory, trying to minimize the impact of those fluctuating raw material prices.
Smart move. So they're juggling multiple strategies to keep those costs under control. It's like they're juggling chainsaws while riding a unicycle.
Uh-huh. That's a great way to put it. Now, their financial statements also shed some light on another important aspect of their business, their debt situation.
Ah, yes, debt. Always a hot topic. So how much debt are we talking about here?
Taking a look at their consolidated balance sheet, their total debt as of September 30th, 2024, was approximately 5,989 crore rupees. This includes both their short-term and long-term borrowings.
Okay, so that gives us a total figure. But have they actually been adding to that debt recently? Have their borrowings been going up?
Nope, not at all. In fact, their debt actually decreased a bit from the previous quarter, which ended June 30th, 2024. Back then, their total debt was about 6,128 crore rupees.
So they've managed to trim their debt a bit. That's good news, right?
Absolutely. Lower debt makes a company financially healthier, especially when economic times are a bit uncertain.
Right. Less debt means less risk. So it seems like they're being responsible with their finances and focusing on keeping their debt in check.
Definitely. By lowering their debt, they're also freeing up cash flow that they can use for those strategic initiatives, like that merger with Cavendish Industries we talked about.
Ah, yes, the merger. It all ties together. It's not just about numbers on a spreadsheet. It's about creating a stronger, more agile company, ready to take on whatever comes next in this rapidly evolving automotive landscape.
You got it. And they're doing all of this while keeping their commitment to innovation and sustainability in mind. It's a pretty impressive balancing act.
Definitely. Now, there's one more piece of this puzzle I want to explore, something I think our listeners will find really exciting, their venture into smart tire technology.
Ah, yes, the smart tires. Now, things are getting really interesting. Forget what you think you know about tires. We're not just talking about rubber anymore.
Okay, now you've got my attention. What are we talking about?
We're talking about tires embedded with sensors, little tiny computers basically that provide real-time data about the tire's performance. Imagine your tires telling you when they're about to wear out or even warning you of a potential problem before it turns into a dangerous situation.
Whoa, that's like giving your tires a voice.
Exactly. And the potential applications go way beyond just fancy cars. This technology could be huge for improving efficiency, safety, and even environmental impact across all types of vehicles. Think about commercial fleets, those big trucking companies. They could use this tech to optimize tire pressure, save fuel, and reduce downtime caused by unexpected tire failures.
Oh, the implications are huge. It sounds like a glimpse into the future of driving, and it's already happening right now.
It is, and JK Tyre, they're right at the forefront of this revolution.
This is definitely something our listeners should explore further. It's a rabbit hole worth going down, trust me.
Absolutely. Now, let's shift gears a bit and talk about JK Tyre's different revenue streams. Where does the money come from?
All right, so where does JK Tyre actually make most of its money?
Well, for the second quarter, if we look at their consolidated revenue, which, remember, includes their subsidiaries, it breaks down into a few main categories. The biggest chunk, about 3,176 crore rupees, comes from their operations within India.
So even though they're this global player, the majority of their business is still within India.
Yep, that's right. But their international operations are becoming increasingly important. Their Mexican subsidiary, JK Tornel, brought in a respectable 593 crore rupees this quarter.
Not too shabby. And there's that others category. What does that cover?
Good catch. That others category covers revenue from other global markets where they have a presence. This past quarter, that segment added about 35 lakh rupees to their total.
It's fascinating to see how those different revenue streams are developing. Their investor presentation mentioned they're actively trying to expand in Africa, the Middle East, and Southeast Asia. Looks like they've got some ambitious plans to keep growing.
Definitely. They're not content with just being a big fish in the Indian pond. They've got their sights set on becoming a global leader.
Smart move. Global expansion helps them spread the risk, diversify those revenue sources. Like they're not putting all their eggs in one basket.
Exactly. By expanding their presence in different regions, they're not only increasing their overall market share, but also reducing their reliance on any single market. This makes them more resilient to, say, economic fluctuations or regional downturns.
So even though their overall performance might be affected by that slowdown in the Indian market, those international operations can help cushion the blow.
Right. Think of it like a safety net. Their diversified revenue streams bring stability and flexibility, allowing them to navigate those challenging economic conditions a bit more effectively.
Speaking of navigating challenges, we can't ignore their efforts in those environmental, social, and governance factors, the ESG stuff. It's not just a buzzword for them, is it?
Definitely not. They're going above and beyond in this area. They've set some pretty aggressive targets for shrinking their carbon footprint and implemented all sorts of initiatives to get there.
Yeah, their investor presentation mentioned they're already sourcing something like 40% of their energy from renewable sources like solar and wind power. And they're investing a lot in those areas too.
And it's not just the environmental side they're focused on. They're taking this holistic approach to sustainability, tackling social responsibility and good corporate governance as well. Things like making sure they have ethical labor practices, promoting diversity, making their financial reporting super transparent. They're covering all the bases.
It's not just about ticking boxes. It's about really baking sustainability into their DNA.
Exactly. And it's not going unnoticed. They've earned that best-in-class ESG rating from CareEdge, and they've gotten it 2 years in a row. That really shows a genuine commitment, not just words, but real action.
It sends a clear message to investors and customers too. They're walking the walk when it comes to sustainability, and that matters more and more these days.
For sure. It sets them apart. It's not just about making profits anymore. It's about doing business the right way.
Okay, so we know they're famous for their tires, but
Yeah.
what kind of vehicles are we talking about? What's the breakdown in terms of their product portfolio?
All right, if we look at their consolidated revenue mix for Q2, their biggest segment, bringing in 53% of their revenue, is the truck and bus tire market.
So they're not just focused on those passenger cars.
Not at all. They've got a huge presence in the commercial vehicle sector, which is crucial for, those transportation and logistics companies that keep the world moving.
Makes sense. What about passenger car tires? Where do they fit in?
Passenger car radial tires make up another big chunk of their business, generating 30% of their consolidated revenue in Q2. So yeah, they've got a healthy balance between those commercial and passenger vehicle segments.
And what about the remaining 17%? What falls under that?
The remaining portion includes their two- and three-wheeler tire business, which brought in about 4% of their revenue this past quarter. And then there's that others category, which accounts for the last 13%.
Others? That sounds kind of vague. What exactly falls under that category?
Yeah, it's a bit of a catch-all. It probably includes things like those off-the-road tires, farm tires, maybe even some industrial applications. They're not just about putting rubber on cars and trucks. They've got a diverse portfolio that caters to a whole range of industries.
So it's more than just cars and trucks. They're covering a lot of bases. And that wide range of offerings, it shows they're able to adapt to meet the changing demands of the market.
Exactly. They're constantly innovating, expanding those product lines to keep up with this ever-changing automotive world. And let's not forget about their smart tire innovation. It's not just about making tires, it's about, well, making them smart.
Right? They're pushing the boundaries of tire technology with those smart tires, those sensors that provide all that data.
Exactly. They can track tire pressure, temperature, even wear and tear, giving you all that information in real time. Imagine the possibilities. You could optimize performance, prevent accidents, and even make those tires last longer.
It's a game changer,
Yeah.
especially for companies with big fleets of vehicles.
Absolutely. And they're making this technology available to a wide range of customers. Their investor presentation mentioned smart tire solutions for passenger cars, commercial vehicles, even off-the-road vehicles. They're really democratizing access to this cutting-edge stuff.
It sounds like they're not content with just being a traditional tire company. They're embracing this whole digital transformation and becoming a leader in the connected mobility space.
And that forward-thinking approach is really what sets them apart. They recognize that the future of mobility is about so much more than just the vehicles themselves. It's about data, connectivity, intelligent systems that make driving safer, more efficient, and more sustainable for everyone.
Now, let's shift our focus internationally for a bit and zoom in on their Mexican subsidiary, JK Tornel. How are things going for them?
JK Tornel is a big deal for JK Tyre. They're a significant contributor to both revenue and profitability. In the second quarter, they generated 593 crore rupees in revenue.
That's pretty impressive. Seems like they're well positioned for growth in that market.
Definitely. Their investor presentation talked about expanding their product portfolio in Mexico, particularly in those higher margin segments, and they're also focusing on strengthening their distribution network there.
So they're tailoring their approach to each market. That makes sense. You
Yeah.
can't just assume what works in one country will automatically work in another.
You got it. You have to be sensitive to cultural nuances, consumer preferences, what the competition looks like. It's a delicate dance.
And JK Tyre seems to be finding that balance between global ambitions and adapting to those local dynamics.
Exactly. They understand the markets they operate in. They're leveraging their strengths to seize those growth opportunities while staying sensitive to the nuances of each region.
Speaking of strengths, let's talk about their research and development. It's clear from their investor presentation that they're putting a lot of resources into innovation.
Their commitment to research and development is definitely a big strength. It's embodied in their state-of-the-art facility, the Raghupati Singhania Center of Excellence, located in Mysore, India.
It's an incredible facility. Didn't they say they have like over 200 scientists and engineers working there developing new tire technologies?
Yep, over 200. They're not messing around. It really shows you how much they value innovation, how much they want to be at the forefront of this industry.
So what exactly are they working on in their R&D center?
Oh, all sorts of stuff. Developing sustainable materials, improving tire performance and durability, exploring cutting-edge technologies like nanotechnology and predictive modeling to optimize the whole tire design and manufacturing process. They're really covering a lot of ground.
It's amazing how they're blending traditional tire craftsmanship with super advanced science.
It's a winning combination. Their deep understanding of tire manufacturing, combined with these cutting-edge scientific tools, is a recipe for truly innovative products.
And it's not just about creating fancy features for the sake of it, right?
Mhm.
They're actually using these innovations to tackle real-world challenges, like improving fuel efficiency and reducing their environmental impact.
Exactly. Sustainability is woven into the fabric of their R&D efforts. They're always on the lookout for new materials, new manufacturing processes that minimize their environmental footprint while making their tires even better.
Yeah, their investor presentation highlighted that passenger car tire they developed that's made from like 80% sustainable materials.
That's huge. It proves they're walking the walk when it comes to sustainability. They're not just talking about it, they're putting their money where their mouth is and investing in R&D that can actually make a difference.
It seems like their R&D efforts are paying off too. They've been awarded tons of patents for their innovative tire technologies.
Absolutely. Those patents are proof of their ingenuity and their dedication to developing truly unique solutions. They're not just keeping up, they're setting the pace in the tire industry.
And they're not hoarding these innovations for themselves either. Remember, they're introducing those new EV-specific tires for both passenger cars and commercial vehicles. That's a big step.
It is. As the demand for EVs keeps skyrocketing, tire manufacturers have to step up and offer specialized tires that can handle the unique demands of these vehicles.
Right, because EVs are usually heavier than gas-powered cars because of those battery packs. So the tires need to be able to handle all that extra weight.
Exactly. And they need to provide the right grip for all that instant torque that those electric motors generate, plus lower rolling resistance to maximize the battery range. It's a whole different ballgame.
JK Tyre seems to be ahead of the curve in this area, investing in R&D and expanding their product portfolio to cater to this growing EV market.
It's all about anticipating the future and being ready for it. And JK Tyre, they're doing a great job of that.
Okay, let's talk about this merger with Cavendish Industries Ltd, CIL. It seems like a big strategic move.
Oh, it definitely is. We're talking two powerhouses, JK Tyre and CIL, coming together to create one streamlined and powerful force.
It's more than just adding size, though, right? It's about creating synergies, unlocking new value.
You hit the nail on the head. The goal is to generate significant cost savings, create a wider range of products, and reduce those regulatory obstacles that can sometimes slow things down.
And they're not being shy about sharing those goals. Their investor presentation outlines some key benefits, like improved operational efficiencies, economies of scale, a more streamlined decision-making process.
And it really simplifies their corporate structure. Since CIL is already a subsidiary of JK Tyre, this move brings everything under one roof, one single listed entity. Much cleaner and easier to understand.
And that makes it easier for investors to, understand the business and track their performance. Transparency is key.
Absolutely. A simpler structure often leads to greater transparency and accountability, which are very attractive to investors.
It's clear they've thought this through. Their presentation goes into detail about how the transaction will work, what kind of value it will create for shareholders. They're not just saying, hey, we're merging. They're laying out a clear roadmap.
And that level of transparency is really important for building trust with investors. It shows they're approaching this strategically, thoughtfully, with the goal of creating long-term value for everyone involved.
And it's not just about the financial bottom line either. They're also highlighting the social and environmental benefits of this merger.
You're right. Their investor presentation emphasized how the merger will actually help their sustainability efforts, consolidating resources, implementing best practices across all their operations. It's a win-win situation.
It's that holistic approach we were talking about. It's not just about profits. It's about making decisions that are good for business, good for people, and good for the planet.
Couldn't have said it better myself. All right, let's take a closer look at their financial performance. Those consolidated financial statements will give us a detailed picture of their revenue, expenses, and profitability.
Time to crunch some numbers.
Let's do it. Their consolidated statement of profit and loss, sometimes called the income statement, shows that their total revenue for the second quarter of fiscal year 2025 was 3,643 crore rupees. That's a 7% decrease compared to the same period last year.
Okay, so we're seeing that revenue decline again. What about their expenses? How did those break down?
Their total expenses for the quarter came in at 3,199 crore rupees. A significant chunk of that, about 2,400 crore rupees, was due to the cost of those raw materials they used in manufacturing.
Again, those raw material costs rearing their ugly head. It's got to be putting a serious dent in their profits.
It is. It's a challenge for a lot of companies in the tire industry right now, and we're seeing it reflected in JK Tyre's performance.
So despite those challenges, are they still managing to make a profit?
They are. Their profit before tax for the quarter was 199 crore rupees. After factoring in taxes, their profit after tax was 144 crore rupees.
So they're still in the black, but those rising costs are clearly having an impact.
They are. It's a tough environment right now, but they're making the best of it. They're operating in a complex and ever-changing industry, and their performance reflects both the opportunities and the challenges they're facing.
Now let's focus in on their standalone financial statements for a moment. We want to see how their operations specifically in India are doing.
All right, so looking at their standalone statement of profit and loss, their total revenue for the second quarter was 2,533 crore rupees, a 6% drop from the same period last year.
So their standalone revenue declined slightly slower than their consolidated revenue. Interesting.
Yeah, it suggests that their international operations might have been hit harder by the global economic slowdown.
Okay, makes sense. What about their expenses and profitability within India?
Let's dive in. Their total expenses for the quarter were 2,261 crore rupees. And just like we saw in those consolidated numbers, the cost of raw materials used was a big expense, adding up to 1,473 crore rupees.
So those rising raw material costs are showing up across the board, impacting both their consolidated and standalone results.
Exactly. But remember, they're tackling this head on. They're adjusting prices, focusing on premium products, and managing inventory strategically.
Right, they're fighting back, trying to minimize the impact on their bottom line. So what about their profits specifically in India? How did they fare?
Well, their standalone profit before tax for the quarter was 136 crore rupees, while their profit after tax came in at 99 crore rupees.
So again, they're still profitable, but those rising costs are definitely having an impact on their margins.
Absolutely. It's a challenge they're working through, but they're laser focused on optimizing those costs and improving their efficiency to counteract that pressure on their profits.
It's good to see that they're not just accepting the situation, they're actively fighting back and looking for solutions. It shows they're adaptable and resilient. Okay, let's move on to another important aspect of their financial health, their debt situation.
Right. Debt. Always an important factor to consider. If we look at their consolidated balance sheet, we see their total borrowings as of September 30, 2024, were 5,083 crore rupees.
And how does that compare to the previous quarter?
Actually, their borrowings are down a bit from the previous quarter, which ended on June 30th, 2024. Back then, their total borrowings were 5,224 crore rupees.
So they've managed to reduce their debt slightly. That's a good sign, right?
Absolutely. Especially in these uncertain economic times, reducing debt makes a company much more financially flexible and less vulnerable to, those interest rate hikes that everyone's worried about.
Makes sense. So they're being proactive about managing their debt.
They are, and it's a crucial part on their long-term strategy. By keeping those debt levels under control, they're building a more stable financial foundation.
It's not just about cutting debt, though, right? It's about making sure their debt is structured in a way that's manageable and makes sense for their overall business goals.
You got it. They're always looking for that balance between using debt to finance growth opportunities while maintaining a healthy debt-to-equity ratio.
And their investor presentation really emphasize their commitment to maintaining a prudent capital structure, which includes optimizing their debt profile.
It's a good sign. It tells investors that they're taking a responsible and strategic approach to managing their money.
Now, let's take a peek at their cash flow statement. This gives us a glimpse into how they're generating and using their cash.
All right. Their consolidated cash flow statement tells us that they generated 1,064 crore rupees from their operating activities in the first half of fiscal year 2025.
So their core operations are generating positive cash flow. That's a healthy sign, right?
It is. Positive cash flow from those core operations is vital. It shows they're generating enough cash from their primary business to cover their operating expenses and still have some left over to invest in growth opportunities.
What about their investing activities? What's happening there?
Their cash flow statement shows that they used 283 crore rupees for investing activities in the first half of fiscal year 2025. And a large chunk of that, 348 crore rupees, went towards purchasing property, plant, and equipment.
So they're investing in their infrastructure, expanding their capacity. That's good for future growth, right?
Definitely. They're also making strategic investments in other areas, like their acquisition of that smart tire technology company back in 2019.
Ah, yes. That acquisition really shows their commitment to staying ahead of that acquisition really shows their commitment to staying ahead of the curve when it comes to tire technology.
Absolutely. They're not just sitting on their cash, they're putting it to work, investing in their future.
Okay, so we've seen where their cash is going, but how about those financing activities? How are they handling their debt and equity?
Well, their cash flow statement indicates they used 45 crore rupees for financing activities during that same period, the first half of fiscal year 2025. This includes things like repaying borrowings and those dividend payments to shareholders.
So they're balancing those debt reduction efforts with rewarding their shareholders.
Yeah.
Sounds like a delicate balancing act.
It is, but it seems like they're managing it pretty well.
Their cash flow statement also shows they had a decent amount of cash on hand, 201 crore rupees to be exact, as of September 30th, 2024.
That's a good position to be in, that cash provides a buffer, gives them some breathing room in case things get a bit rocky economically.
Right, so they've got some wiggle room to deal with unexpected challenges or maybe even jump on a strategic opportunity if it comes along.
Exactly.
Yeah.
And it also shows they're managing their cash well, which is a good indicator of their overall financial health.
Makes sense. Okay, let's move on to their consolidated balance sheet. This gives us a snapshot of their assets, liabilities, and equity at a specific point in time.
All right, so their consolidated balance sheet as of September 30th, 2024 shows their total assets at 14,094 crore rupees. Remember, assets are a mix of things. Current assets, stuff they expect to use or convert to cash within a year, and non-current assets, things they plan to hold for longer.
You give us some examples of their major assets, just to paint a clearer picture for our listeners.
Sure. Their biggest non-current asset is their property, plant, and equipment, valued at 6,663 crore rupees. This basically reflects all the money they've invested in their manufacturing facilities and other infrastructure.
Makes sense.
Yeah.
They need those facilities to make those tires.
Right.
What about their current assets?
Their largest current asset is their inventories, which are at 2,773 crore rupees. Inventories include things like raw materials, works in progress, and finished goods that are ready to be shipped out.
And it looks like they've got a big chunk of money tied up in trade receivables, too.
Right. Those are amounts owed to them by customers for goods or services that have already been delivered. Their trade receivables come in at 2,905 crore rupees. It's important they manage these well, make sure those payments are coming in on time.
Yeah, cash flow is king. Okay, let's switch gears and look at the other side of the coin. Their liabilities. What are their obligations to creditors?
Their consolidated balance sheet shows that their total liabilities are 9,489 crore rupees. Remember, liabilities include both current liabilities, things due within a year, and non-current liabilities, which have a longer maturity.
So what are their biggest liabilities? What stands out?
Their largest non-current liability is their borrowings, which total 2,185 crore rupees. These are loans and other debt instruments they've used to finance their operations.
And what about those current liabilities?
Their biggest current liability is actually borrowings as well, amounting to 2,927 crore rupees. These are usually those short-term loans used to manage their day-to-day cash needs.
Ah, so keeping the wheels turning, so to speak.
Exactly. And of course, they have a sizable amount of trade payables, 2,286 crore rupees to be exact. Those are amounts they owe to their suppliers.
Right. They've received those goods and services but haven't paid for them yet.
Right. Managing those trade payables efficiently is key for maintaining good relationships with their suppliers. Keeps things running smoothly.
Now, let's talk about their equity. That's the ownership interest in the company.
Their consolidated balance sheet shows their total equity at 4,606 crore rupees. Equity includes things like share capital, the money invested by shareholders, and reserves and surplus, basically accumulated profits and gains.
So their equity position tells us something about the financial strength of the company.
Exactly. A strong equity base provides a cushion, if there are any losses, and it also gives them more flexibility to raise capital if they need to in the future.
It also reflects how much confidence shareholders have in the company and its future prospects.
Absolutely. Now, it's important to remember JK Tyre isn't operating in a vacuum. They're part of this dynamic, ever-changing industry. What are some of the key trends and challenges they're facing right now?
Well, that's a great question. It's one thing to look at the numbers, but it's another to understand the forces shaping those numbers.
Sure.
So what are the big trends and challenges on the horizon for JK Tyre?
One of the biggest, and we've touched on this a bit already, is the rise of electric vehicles. As more people and businesses make the switch to EVs, the demand for traditional tires is likely to decrease.
That's a big shift for a company like JK Tyre. They've got to adapt, innovate, and keep up with the EV revolution.
And they are. They're developing those EV-specific tires, investing in smart tire technology. They're not just sitting on the sidelines.
Another trend we can't ignore is the increasing focus on sustainability. Consumers and investors alike, they're demanding that companies operate in a more responsible way.
Absolutely. And JK Tyre is on board with that. They're setting ambitious sustainability goals, shrinking their carbon footprint, and integrating those ESG principles into every aspect of their business.
But it's not all sunshine and roses, right? They're facing some serious competition, both from companies in India and those international players.
Oh, for sure. The tire industry is incredibly competitive. Lots of companies are fighting for market share. To stay ahead, JK Tyre has to keep innovating, offering high-quality products and providing top-notch customer service.
And then there's the whole issue of raw material prices, which we talked about earlier. The price of natural rubber especially can be incredibly volatile.
Yeah, natural rubber is crucial for tire manufacturing,
Yeah.
but it's sensitive to all sorts of things, like weather patterns and global demand. Those prices can fluctuate wildly, making it tough for companies to predict their costs and manage their profits.
So how is JK Tyre handling this?
They're using a bunch of strategies like hedging, trying to lock in prices in advance. They're being strategic about where they source their materials and focusing more on those premium product with higher profit margins.
So they're finding ways to mitigate that risk.
Exactly. They're being proactive. And then there's the whole evolving landscape of the automotive industry itself. It's changing rapidly with things like self-driving cars and all those connected vehicle technologies.
Right. It's a whole new world, and tire manufacturers have to keep up.
Absolutely. It's creating new opportunities, but also new challenges. And I think JK Tyre is in a good position to capitalize on those opportunities. They're innovative, they're focused on sustainability, and they're committed to providing great customer experiences.
It sounds like they're not just along for the ride. They're actively shaping the future of the industry.
That's a great way to put it. Now let's shift gears for a moment and talk about how they communicate with their investors. How are they keeping them in the loop?
Right. Transparency and communication are key, especially when it comes to keeping investors happy. So how's JK Tyre doing in that department?
Well, they've got a very comprehensive investor relations section on their website. You can find all sorts of information there, their financial reports, investor presentations, documents on their corporate governance practices. It's all there.
And they also do those regular earnings conference calls and investor meetings, right? Where they discuss their performance and answer questions from analysts.
Yep, they do.
Yeah.
Their investor relations team is very proactive. They understand the importance of keeping investors informed and engaged.
And their efforts are being recognized. They've actually won awards for their transparency and communication in investor relations.
That's impressive. It shows they're committed to good corporate governance and building trust with their investors.
Definitely. It's not just about meeting the bare minimum requirements. It's about going above and beyond to keep those investors informed and confident. Now, before we wrap up this deep dive into JK Tyre, I want to highlight a few other things about the company that I think are worth mentioning.
Oh, there's always more to the story, right? Beyond just the numbers and the financials.
Exactly. For one thing, they've been recognized for their excellence in manufacturing. They received the Sword of Honor for Safety from the British Safety Council in the UK, and get this, they got it across all their plants.
Wow, the Sword of Honor. That's a huge deal. It's not easy to earn that recognition.
It speaks volumes about their commitment to creating a safe and healthy work environment for their employees. Safety is clearly a top priority for them.
Absolutely. And remember all those sustainability efforts we were talking about earlier? Well, those are getting recognized too. They were recently featured in Business World's list of India's top 30 most sustainable companies.
That's fantastic. It sounds like they're walking the walk when it comes to sustainability and setting a great example for other companies in the industry.
They are. And here's another interesting tidbit. They've been a major force in promoting motorsports in India. For over 3 decades, they've been helping to develop infrastructure and support young talent, basically making India a motorsports hub in Asia.
That's incredible. It's not something you'd necessarily associate with a tire company, but it shows their passion and commitment to something they believe in.
Right. They're not just about business. They're about giving back and supporting something that brings joy and excitement to people. And get this, they even hold a record in the Limca Book of Records.
Really? What for?
They created India's largest off-the-road tire, the VEM04.
Wow, that's something else. They're not afraid to push the boundaries, whether it's in technology, sustainability, or even record-breaking feats.
Yeah.
They definitely seem to have that innovative spirit.
They do. And they're achieving all of this while staying true to their core values, integrity, customer focus, social responsibility. They're a company with a conscience, and it shows.
I love that a company with a conscience, it's not just about profits, it's about making a positive impact on the world around them.
Well said. They're a great example of how a company can be successful and still care about the bigger picture.
Absolutely. Now let's shift gears back to their financials for a moment.
Hmm.
We need to delve into the specifics of their consolidated financial statements.
All right, let's break it down. Their consolidated statement of profit and loss, which outlines their revenue, expenses, and profits, shows that for the second quarter of fiscal year 2025, their total revenue was 3,643 crore rupees. Now, that represents a 7% decrease compared to the same period last year.
So we see that revenue decline reflected again. What about their expenses?
Their total expenses came in at 3,199 crore rupees for the quarter, and a big chunk of that, about 2,400 crore rupees, was due to the cost of those raw materials used in manufacturing.
Those darn raw material costs are really eating into their profits. It's a recurring theme we're seeing here.
It is, and it highlights the challenges they're facing in this current economic environment. But, they're not just sitting back and accepting it. They're implementing strategies to mitigate those cost pressures.
Right. So what about their profitability overall?
Their consolidated profit before tax for the quarter was 199 crore rupees. Now, after taking into account their tax obligations, their profit after tax came in at 144 crore rupees.
So they're still making a profit, but those rising costs are clearly having an impact on their margins.
Absolutely. It's a complex situation, but they're navigating it as best they can. They're working hard to optimize their operations and find ways to enhance their efficiency.
It's a testament to their resilience, their ability to adapt and make those tough decisions. Now, let's zero in on their standalone financials, which give us a closer look at their operations specifically in India.
Okay, so their standalone statement of profit and loss reveals that their total revenue for the second quarter was 2,533 crore rupees, a 6% drop compared to the same period last year.
So their standalone revenue declined at a slightly slower rate than their consolidated revenue. That's interesting.
Yeah, it could indicate that their international operations were impacted more by the global economic slowdown.
Makes sense. So what about their expenses and profitability within India specifically?
All right, their total expenses for the quarter came in at 2,261 crore rupees. And just like their consolidated results, the cost of raw materials consumed was a major expense, accounting for 1,473 crore rupees.
So that pressure from those rising raw material costs is definitely a consistent theme across both their standalone and consolidated results.
Absolutely. It's something they're actively addressing, with those price adjustments that focus on premium products and those strategic inventory management practices.
Right. They're working on all fronts to minimize that impact on their margins. So what do their standalone profits look like?
Their standalone profit before tax for the quarter was 136 crore rupees, and their profit after tax landed at 99 crore rupees.
Okay, so they're still making a profit in India, but those rising costs are definitely taking a bite out of their earnings.
That's right. It's a challenging environment to operate in, but they're demonstrating their commitment to efficiency and cost optimization to help navigate these rough waters.
It's all about staying agile and adapting to the changing market conditions. Now let's talk about their debt situation, focusing specifically on their standalone operations within India.
All right, looking at their standalone balance sheet, as of September 30th, 2024, their total borrowings came to 4,182 crore rupees.
Okay, so that gives us a snapshot of their debt level. But how does that compare to the previous quarter? Have their borrowings been increasing?
Actually, their standalone borrowings have decreased slightly from the previous quarter, which ended on June 30th, 2024. Back then, their total standalone borrowings were 4,323 crore rupees.
So they've managed to trim down their debt a bit, which is a positive sign, right?
Absolutely. It shows they're actively managing their debt levels and working to improve their financial stability, especially important in these uncertain economic times.
Right. Reducing debt helps to reduce risk and creates more financial flexibility for the company. So what does their cash flow look like for their standalone operations in India?
Their standalone cash flow statement shows they generated 782 crore rupees in cash from their operating activities in the first half of fiscal year 2025.
So their core operations in India are generating positive cash flow.
That's right. Their core business in India is generating enough cash to cover operating expenses and support their investment activities.
What about their investing activities within India? What's their cash flow statement telling us there?
It shows they used 135 crore rupees for investing activities during the first half of fiscal year 2025. A significant portion of that, 202 crore rupees, went towards buying property, plant, and equipment.
So they're continuing to invest in their infrastructure and capacity in India.
They are. It's all about positioning themselves for future growth and ensuring they have the resources in place to meet that growing demand.
Now, what about their financing activities in India? How does their cash flow statement break that down?
Well, their cash flow statement indicates they used 15 crore rupees for financing activities in the first half of fiscal year 2025. This includes activities like repaying those borrowings and paying out dividends to shareholders.
So, just like their consolidated numbers, they're balancing debt reduction with rewarding their shareholders.
Exactly. It's about finding that balance between financial prudence and sharing those profits with the people who have invested in the company.
Their standalone cash flow statement also shows that they had 103 crore rupees in cash and cash equivalents as of September 30th, 2024.
That's a healthy cash position, which gives them that flexibility to manage any unexpected challenges that come up.
Right, that's a good cushion to have, especially when there's so much economic uncertainty in the air. Okay, now let's look at their standalone balance sheet as of September 30, 2024.
All right, their standalone balance sheet shows that their total assets in India are 8,806 crore rupees. Remember, assets are those things the company owns that have value.
And what are their major assets in India?
Their biggest asset is their property, plant, and equipment, which is valued at 4,602 crore rupees. These are the tangible assets they use to produce their tires.
Right, their factories, their equipment, all that good stuff. What about their current assets in India?
Their biggest current asset is their inventories, which are at 1,790 crore rupees. This represents all the raw materials, works in progress, and those finished tires they have on hand.
And just like we saw in their consolidated balance sheet, they also have a significant amount of trade receivables.
Yep. Those trade receivables, the money owed to them by customers, come to 1,533 crore rupees.
Now, let's flip the script and talk about their liabilities, those obligations they have to pay.
Okay, so their standalone balance sheet shows total liabilities of 4,497 crore rupees.
And what are their largest liabilities in India?
Their biggest liability is their borrowings, which total 1,772 crore rupees.
And what about their current liabilities, those obligations due within the next year?
Well, their biggest current liability is also borrowings, those short-term loans, totaling 2,410 crore rupees.
Okay, and we can't forget about those trade payables, the money they owe to their suppliers.
Right. Those trade payables come to 12,255 crore rupees.
Now let's look at their equity, the ownership interest in their Indian operations.
Their standalone balance sheet shows their total equity at 4,309 crore rupees. Remember, this represents the shareholders' stake in the company.
Okay, so we've delved into the details of their standalone balance sheet, understanding their assets, liabilities, and equity position in India. But JK Tyre, they're not just about numbers on a spreadsheet, right? They're a company with a story, a rich history, and a vision for the future.
Exactly. They've achieved so much, overcome challenges, and they're actively shaping the future of mobility.
They're a company that's constantly innovating, pushing the boundaries of technology, and they're deeply committed to sustainability. And they're doing all of this while staying true to their core values of integrity, customer focus, and social responsibility.
It's a powerful combination. They're a company that's not just focused on profits, but also on making a positive impact on the world.
And that's a story worth telling. We've covered a lot of ground in this deep dive. Their financials, the merger, all those sustainability initiatives, even those mind-blowing smart tires. But I want to leave you with something to think about, a final thought to ponder.
Ooh, I like where this is going. Hit me with it.
Okay, so imagine this. You're cruising down the road, right?
Yeah.
And your tires, they're not just keeping you on the pavement, they're actually communicating.
Communicating, like talking to me.
Not exactly talking to you, but sending information, data. Not just to your car, but to other vehicles, maybe even to the road itself.
Whoa, hold on a sec. Are we talking tires that are part of some massive interconnected network?
Exactly. Remember those smart tires we talked about? Well, what if we take that concept a step further? Those sensors, they could feed data into a system that helps manage traffic flow, optimize fuel efficiency across entire fleets of vehicles, maybe even prevent accidents before they happen.
Now that's taking smart to a whole new level. We're not just talking about individual cars anymore. We're talking about a whole intelligent transportation ecosystem.
And JK Tyre, they're already ahead of the curve with their smart tire technology. They're in a prime position to lead this revolution.
It's not just about tires anymore. It's about shaping the future of mobility itself.
So, next time you're out and about, take a look at the tires on the cars around you. They might just be the foundation for a whole new way of thinking about transportation.
A smarter, safer, and more sustainable way of getting around.
And that's something worth thinking about. Well, folks, that brings us to the end of our deep dive into JK Tyre Industries Ltd.
We covered a lot. Their financial performance, their plans for growth, their commitment to doing business the right way.
It's a fascinating company, a company that's not afraid to innovate and push the boundaries. They're definitely a company to watch.
Absolutely. Keep your eye on them, folks.
Thanks for joining us on this journey. We hope you found it informative and maybe even a little bit inspiring.
Until next time, keep learning, keep exploring, and keep asking those tough questions.